What do you know about EQ? Well, EQ, or emotional intelligence, is the ability to understand and manage our emotions, both within ourselves and in our interactions with others. If you saw the men's Wimbledon final at the weekend, we saw this on display, and arguably the ultimate victor, our new Wimbledon champion, Carlos Alcaraz, was able to manage his emotions better on the day. But what on earth does this have to do with investments and investment management? Well, what if I told you that the key to managing money effectively lies not only in spreadsheets, models, and calculations, but also in this often overlooked skill, emotional intelligence? Well, on the show today, we are meeting with David, who is a Chief Investment Officer at an investment management company, and this is one of the topics of conversation. We talk about David's area of expertise, investments, his career journey, and he has some great advice for us too. We also talk about finding your ideal workplace where your values align with the team and the culture, the importance of regular self-reflection to check you're on the right path, harnessing the power of continuous learning, even in the uncomfortable and challenging times. We talk about mental fitness at work and the power of embracing openness at work. And of course, we talk about the power of EQ, emotional intelligence, especially in this AI-dominated world. So if that all sounds good to you, fantastic. David and I will see you in the show. Enjoy.
Welcome to the show, David. Thanks so much for joining us.
Thanks for having me.
All right. How about we get started? Tell us a little bit about who you are, what you do, and how long you've been doing it for.
Sure. Okay. So my name is David Vickers. I am currently, and I think we should always probably say that, currently the Chief Investment Officer of Brunel Pension Partnership, which is a LGPS pool. So we run the money for 10 underlying local government authorities. Well, actually 9 plus the Environment Agency, which is technically a different institution. I've been doing that for a little over 2.5 years, but my background has always been, prior to this role actually, as a portfolio manager, as a multi-asset portfolio manager. And prior to here, I was the head of a EMEA multi-asset team at Russell Investments, running money for pensions, sovereign wealth funds, insurance funds, and retail investors. Prior to that, I was a partner at Saracen & Partners, and way back when I used to work at Barings Asset Management.
All right, fantastic. Well, I'm really looking forward to getting into all of those subjects. So thank you very much. But let's start. This is a podcast. So tell us if you're somebody that enjoys podcasts, and if so, what are you enjoying right now?
Sure. So I live in Essex, but my office is in Bristol. So I have quite a long commute. So I didn't used to listen to podcasts at all. And then on a long journey, there's not much else to do. So I have, and I've been listening to, I don't know, a variety, and I'm still open to taking options. So one of my favorites at the minute is called The Rest is History, which is two historians, and they bring in guests that give you an insight into different bits in history. And I kind of use it, I go back and fill in the gaps, because obviously I did history A-level at school, but you only learn so much. So I've gone back, and for example, I was thinking the one I was going to listen to later on today is The Fall of the Roman Empire. I've done the history of Denmark, which was a bit obscure, but someone recommended it. And then I listen also to The Rest is Politics, which is also kind of a spin-off or a sister show about kind of politics and current affairs. And then there's a whole raft of other things that, depending on my mood and whether I'm trying to relax or learn, I'll flip between the two.
Yeah. All right. Well, thanks for sharing those. And that's the great thing about podcasts, isn't it? You can be entertained, educated, they can make you laugh. There's really something for everybody, which I think is great.
Exactly. And for me, it depends on the state of the road. If I have to concentrate, I might put them on differently. And if if the roads are clear, I can concentrate. I can maybe listen to something with a bit more oomph behind it.
Yeah. All right. Thank you. So, Chief Investment Officer, there are so many misconceptions about what we do. I'd really love to understand the common misconceptions of your role and what people outside of the industry might think you're doing all day.
Yeah. I think there are some misconceptions even within the industry, because you can get different types of chief investment officer, and I've worked for a whole variety. It depends on the organization, quite honestly. You can get ones that are very much concerned with the investment infrastructure. So making sure the investment team have the right tools, the right capability, and indeed they're the right people within the investment team. You can get those who essentially run the firm, almost a CEO type of figure. And then you get the other, I guess, a third figure, which is those that are have been investors, probably quite reasonably decent investors, and have migrated to kind of head teacher from teacher. And they are usually more inclined to talk about investments, think about investments, provide strategic input, and then speak to clients a lot more. And for me, at least, I kind of do a little bit of all three, a little less on the infrastructure, quite honestly, because of the nature of the organization I work for. But my role, as I see it, is no longer to manage money, it's to manage people who manage money. So without sounding too grand, I mean, I don't really have a nautical background here, but being the captain of the ship, you rarely touch the wheel. You're not in the engine room, you're not doing comms, you're just making sure that everything is working as it should. And you perhaps set the strategic direction, and then it's about governance. Are we still on track? Are we still doing what needs to happen? Are we doing it efficiently, effectively? Is everyone happy? Are people learning along the way? Do we have the right level of investment debate? So just making sure there's challenge and efficiency from the first investment to the end investment, making sure that supply chain of investment management, whether that's the debate, the people, the processes, the infrastructure, is as seamless as it can be.
Yeah. All right. Thank you very much. And I'm wondering if you might be able to give us an overview of the investment management industry and where your firm fits in. And I'd also love it if we could do a bit of myth busting there as well.
Yeah, sure. Right. I mean, it expands and contracts depending on where we are in the cycle, the asset management industry. And at the minute, it's probably at the end of an expansionary trend, I would suggest. But it's also it's changing. It's changing because passive plays a much greater part. It's changing because the costs of doing business are going up. So consolidation is really quite aggressive across even big firms are merging together, as well as small firms. And so there are less participants, there are less boutiques. If you are a boutique, i.e. small firm, you might be in a multi-boutique. So you might have a parent who sits above you and lets you do what you want to do. But broadly speaking, I think the broad principles are the same. The commercialities can be different. So you can get investment firms that are much more retail orientated. So aggregate the average thousands of pounds you might have in an ISA, but there might be thousands of clients that have that, and that adds up to quite a big pot. You might be in the end of the industry that I'm in, which is more institutional. So our average client probably has about somewhere between £2 or £3 billion in their pension fund, and obviously that's quite a lot. And it means you've got a lot more to play with, but only one source of client contact. So it's a slightly different model, can be a bit more in depth. Actually, I think one of the misconceptions is that the institutional investor is more sophisticated. I think perhaps one could have argued that a long time ago, but I don't want to say that everyone who's a retail investor is not sophisticated. I think that's nonsense. I'm a retail investor in of myself. But certainly what's happened over the years is people have outsourced. And so there's a big trend. So even if you're at an IFA firm, you might have outsourced somebody to run your money for you. So you're getting economies of scale that are much different to how the industry used to work, which is not quite mum and pop, but I would go to an IFA who would give me advice, and their advice would be bespoke to me, and it'd be quite unique. Nowadays, that model is very difficult to implement. You need to have models and research. So you have these kind of model-based portfolios, risk-rated portfolios. And so actually, the retail community has institutionalized in its framework. And so actually, there's probably more homogeneity than there's ever been in the industry. And the tools that have always been available to an institutional investor are now also available, I think, to a retail investor.
Yeah. Oh, that's really helpful. Thank you very much. So, David, if we zoomed into an average day or week, what might we find you doing?
Yeah, sure. There's probably no such thing as an average week, but there's probably an average month or quarter, and then the diary gets moved around. I mean, one of the interesting things about what I do is you can plan what your week, your month might look like, but things get in the way, and by which I mean that the investment markets change and move, And, obviously we've got a war in Ukraine that wasn't predicted a couple of years ago. We've had COVID, we've had rampant inflation, we've had banks going under. So that if that happens tomorrow, my diary for next week will look very different than the way I thought it does.
Yeah.
But broadly speaking, my role, I guess, breaks down into a number of silos that are interwoven. So there's client relationship work. So I'll go and talk to our clients and the board and our governance structure about performance. So how have we done, and explain that. How might we do? Because I think also that's a bit of a misconception. When you report performance, it is what it is. You can't change it. Actually, it's very important to talk about how you might perform going forward under the macroeconomic scenario you find yourself in. So I try at least to provide as much forward guidance as is possible, and then manage expectations. And I think that's horrifically important when you're managing money, which is also to manage the expectations of the people that you're earning money for, so that everyone's on the same page. And as much as one can, you try and mute the surprises, both good and bad, that might come along. So there's client relationship work. Yeah. There's then managing the team. And in my team, I have 27 investment professionals. And so there's an element of keeping track on what they're doing, what they need, what they want, what the thought process is. And again, back to that earlier point of making sure I'm fostering the right culture, which is debate, challenge, authenticity, but also respectfulness. We do work in an industry where people have differing views within the same team, and that has to be managed in a sensitive way. But also we can't ignore challenge, because otherwise you get groupthink and behavioural biases creep into the portfolio. So it's a constant fine line between encouraging challenge, but encouraging it in a respectful way, and building that kind of team culture. And then I also sit on the board at where I am. So then I have board responsibilities, which is making sure that the firm as a whole is governed properly and is working as it should in an efficient and pragmatic way, within keepings with our clients' expectations, but also the regulations. And then when I get time, I do like to still ensure that I'm up to date with the investment world and how it works. I mean, whilst I'm not managing money anymore, I can't be blind to what's going on in the universe and the environment in which the team are operating in. So I spend, the last part of my role would be, the first depends on what the week's been like, looking through reports, looking at strategic items that come up on the agenda, thinking about how things might pan out next year, what we might need to do, what we might need to prep for in advance. We kind of role-playing game or kind of war game for different scenarios. So if this happens, what might we do? And often you're preparing for things that don't happen, but at least then you're prepared. So those kind of four silos are roughly where my work takes me. And it just depends on any given week how much of one I do relative to the other. In reporting season, obviously, it's a lot more client orientated. And then out of reporting season, probably a bit more investment orientated, depending on what else is going on.
All right. Thank you. So just on the team, you mentioned you have 27 investment professionals in the team. I think it might be helpful to share an overview of a typical investment team in terms of what verticals there are within a team.
Yeah, so in my team at least, and I can talk to other ones I've worked in because they're reasonably similar, but my firm looks at listed markets, so kind of equity markets, bond markets, all the things that trade daily. We also have a private markets team, which is more about private equity, private debt, private infrastructure, the type of things that are illiquid. So once you put your money into work, you can move away from them, but they don't certainly trade daily. So if I think of my particular verticals, I have a head of listed markets who has a team underneath him. I have a team in the private markets that's headed by the chap called Richard there. And then also I have a responsible investing team that's headed by Faith, and she has a team underneath her. So they're the three pillars that I work with. We outsource a lot of our money management to a certain extent. So then beneath them, the people who run the portfolios outsource the money to third-party managers. So there's an external team as well I have to keep an eye on and govern. And then I guess the structure is different in different firms, but you come in as a graduate in one of the various teams, or actually across teams, and then you can do a secondment in each to see where it fits best for you. Then you progress to kind of analyst, junior analyst, senior analyst, portfolio manager, senior portfolio manager, head of team, and then eventually CIO. And so there is a very well-trodden path. But actually, it doesn't. I think one of the misconceptions, actually go to your earlier point, is that you can in all industries I've worked in, you can always stop at being a senior analyst. I don't mean that caps you out. I mean, an analyst who does the lion's share of the fundamental analysis should be valued as much as the portfolio manager. And in certain institutions, that's not the way. The portfolio managers often seem to be the more glamorous and high-profile people. But actually, in good organizations I've worked in, they've realized that senior analysts are the bread and butter, and actually you need to reward them and keep them in the same fund. So often you'll have twin tracks, which means you don't have to get capped out and miss the portfolio manager slot. You can continue to progress as a senior and valued analyst and input to the investment team as much as one can. So you don't have to follow it all the way to CIO. There are people who don't want to be CIO. For me personally, until a couple of years ago, I had not wanted to do this job. I really loved running money. That was where I came into the industry. That's what I wanted to do. And it's always called the curse of the head teacher. You might be a decent teacher, so you take the head teacher role. That's very different. Managing people, as opposed to managing money, is a very different skill set and a different job role, actually. And whilst it helps, I have credibility, I think, from running money, so I can talk to other people about how they're doing it and what I did and how they should do it, etc., etc. Managing people, is very, very different. And so, again, there are lots of people who don't want to move into management, and they're very happy being a senior analyst or a senior PM, and that's the role they want. That's the role they want to carve out for themselves and stay there. And again, that's a decision, and it might change as you get slightly older, or it might not. So one doesn't have to reach the chief word. It's somewhat of a misnomer. It's a different role. It's not it's not something that everyone will aspire to be.
Yeah. And that's okay, isn't it? It might not be what everybody wants, and also it might not be suitable for everybody, because like you said, it's a very different skill set. And
and I think in our industry, some of the problems I've seen is when you get a chief investment officer who has found it difficult to let go, still wants to manage money, but the further you move away into managing people and away from managing money, your knowledge stays intact, but your day-to-day operational knowledge probably withers a little bit. And actually, there needs to be that degree of separation. You've handed over the reins to the next generation who are running the money, and you're now helping them and guiding them and providing strategic thought, but they have ultimate control.
Yeah, thank you. So if we were to zoom out, what are some of the things that might happen less frequently throughout the year that might be nice for the audience to hear about?
I don't know about nice for the audience, but certainly the Ukrainian war, one would hope, is a reasonably infrequent occurrence. But there are so many things like that, and often, quite honestly, they are the bad surprises are seen more frequent than the good surprises, because things go well, and then badly, and the bad things are more eye-catching. And we just look at you read the newspapers every day. There's some good stuff in there, but that's kind of business as usual. It's the bad things that dominate the headlines. And I don't necessarily mean bad as in you had an awful day at work, because it provides opportunity. You've maybe prepped for these things, or you've built portfolios that are robust enough to handle them. And then it can provide, and maybe this is a bit perverse, it provides some degree of excitement, and you get to test and challenge yourself in those more difficult markets. There are periods of markets that are super benign, which are relatively easy to make money, but there's that adage that when the tide goes out, you see who doesn't have any swimming shorts on, and it's an interesting time as a portfolio manager and as an investment person anywhere in the industry to test yourself when times are a little tough. And then not so much in my current firm, because we have our clients are guided by the government to be with us, so I'm not out on the road trying to win new clients or defend business, as it were. But if you're in a more normal firm, a commercial firm, so as is rather, we're owned by the government, so we're kind of not quite non-for-profit, but we're in that mold. If you're working at a different firm where profit maximization is the name of the game, losing and winning new clients is interesting. It adds variety to the day, and then you get to meet some super interesting people. I started out in private banking, and I've met some really interesting people along the way. Huge surprises from the kind of people I'd heard about but not met, and then you meet and they're very different to the persona you might think. Or you just get to meet so many people in this industry, and I think that has always been a draw for me. One I didn't know when I came into the industry, because you kind of think you're going to be in a tunnel working with numbers as an investment person, and actually you're not. You are to a certain extent, particularly if you're more junior. you are, because, quite frankly, when you turn up to the hospital, you don't want the surgeon to look 22. You'd much prefer they're 52. So there is a perception around age and experience. But as you graduate through the ranks, you do see a lot more clients. You get to meet a lot more people. You get to describe and talk about what you're doing, and hear their reaction, their feedback. So that can be a surprise, actually. You get to be quite self-reflective of your process and of what you've achieved.
Yeah. I think that's another myth, really, isn't it? That if you go into something like investment management, in the investment management team, similarly to a technology team, there's often that misconception that relationship building, communication skills, they're kind of not as important as those technical skills. But I think you've just shown there that actually throughout one's career, no matter what, technical area they're in, those relationship management skills are always going to be important.
100%. And I think the education system that I came through didn't really put enough emphasis on EQ and communication. So it was much more on IQ, testing your maths, testing your what have you.
Yeah.
I think gradually, I know I've got young children and I can see that changing. But you're absolutely right. You do need a basic level of competence around maths and numbers and, economics, but you can also be a history major or a geography major, because it just shows you've got capability to learn. But even if you've got those kind of hard technical skills, which you can pick up on the job, you do some kind of postgraduate qualifications. If you can't talk about what you're doing, if you can't explain to clients what you're doing, if you can't build credibility through communications, you're going to struggle. If you can't build relationships with your colleagues, because often the relationship between an analyst and a portfolio manager is that the analyst will pitch or describe why they think this stock is worthwhile. If you can't do that, it's going to be a harder job for you, unless you've got an obscenely great reputation where people don't really care or give you a pass, for example. But you need to get to that point first and foremost. So it's an industry for everyone. It really is. And if you're not great at communications, that doesn't mean it's not for you. I just think sometimes the perception is it's all about IQ and not about EQ. And talking to clients, explaining your process, talking to your clients, being able to handle difficult situations, because, you're going to be wrong a lot as an investment person. Even the best are wrong 6-7 times out of 10. Sorry, they're right 6 or 7 times out of 10. If you're right 6 times and you size your positions correctly, you'll make money and outperform your benchmark. But that means being wrong 4 times out of 10. That might mean being wrong the first 4 decisions you make out the gate. So actually, and I'm going to misquote Warren Buffett, but you need a certain level of IQ and competence. The rest is a waste. It's about your personality. It's about how you control yourself, what your deportment's like, how you understand and how you deal with the emotion that comes through. Because one of the things that destroys good investment performance is emotional mistakes, behavioral biases, things you don't know you're doing. How you feel and act on a bad day is very different than how you feel and act on a good day. Are you chasing winners, cutting losers too early? That's a really developing area in economics called behavioral economics. And it's really important because we are hardwired a certain way as a human, and it is counterproductive to how you want to run money. It's kind of fight or flight almost. And on all these other things that we're predisposed to have, heuristics where we make a snap decision based on experience, which doesn't always turn out to be the case. And it's kind of unwinding some of those learned behaviors over years and years of evolution and of your own experience to put you in a slightly different place. And that comes with maturity. It comes with understanding who you are and where you come from and how you act. And that isn't taught at schools. As far as I'm aware, that's something you need to learn on the job. And I think where I've seen people struggle a little bit actually is in the really, on paper, highly successful people. The people who have flown through school and academics, got firsts, PhDs, top of the class, roll call honours, whatever it might be, because they have learned that history has told them they are academically near the top end of the spectrum. And so they expect to succeed. They've always succeeded. When you come into markets, you can fail quite miserably, and it's nothing to do with your ability in the first instance. You might have a position on, and then Trump does something the next day that unravels that particular plan, and you have to react. But you can't always account for these things. And actually, those people have also learned that the harder they work, the better they get. That also isn't the case. You have to work hard, of course, and learn your craft. But if you're working 16-hour days, doing another 4 isn't going to make you any better. you can't get over this. It's
Yeah.
again, it goes to that emotional intelligence that you need to develop, and I think that is not understood in people when they're coming first into the industry, or even how the industry is sometimes pitched.
Yeah. Yeah. And so I'm hearing that resilience is probably really important, and just kind of catching your biases,
Yeah.
because like you say, if you've come out of the gate and there's been 4 mistakes, how do you not get into that mindset where you're almost feeling like you're doomed to make a mistake on that fifth occasion?
Yeah. And that goes to, hopefully, that's where I step in some of my role, that you provide the right support, the right infrastructure, the right collegiate kind of environment for people to be brave enough to make that 5th decision. Because you can make a decision and the reward can be good. You can make the outcome can be right, but you might have made that decision for the wrong reason. And so there's an interesting distinction between the outcome of your decision and whether it was the right decision to have made. So lots of people have made decisions that have turned out to be okay, but actually they didn't know that something else was going to make that decision work out for them when they made it. And so actually being honest and open about these things is really, really important. And you're right, resilience. I think, I've definitely had over the last 25 or so years some not dark days exactly, but when your performance isn't what you'd like it to be, you feel pressure, absolutely. And the more senior you get, the more you feel, because often people come to your funds if you're doing well. They expect you to continue to do well. Often investors would come to you at the top of your performance because they look back and think it's wonderful. They don't tend to come to you at the bottom, which when they should for the ride up the hill, they come often for the ride down. And so you've got these things in the industry that exaggerate how you feel. And I think someone once told me, you're never as good as you think you are when things are going well, and you're never as bad as you are or you think you are when things are going badly. And I've kind of kept that at the back of my mind somewhere, because there are days when you feel on top of the world, and there are ones when you don't in our industry. You have a league table also, which exaggerates all of these things. So everyone has these kind of, I guess, fears and good days and bad days at work. In asset management, sometimes they can be crystallized in a league table, which I just think adds an element of additional pressure. And therefore you need resilience in yourself, and you need resilience in the team around you to weather those particular storms.
Yeah, really interesting. Thank you. So, David, tell us what you love most about your job.
Well, it's different for different things. So the job I used to do, which was being a portfolio manager, which is probably people listening to that that'll be earlier in their career, probably, rather than just jumping straight in at CIO. I loved the fact that the day job is always different. Markets always change. It's politics, it's social, it's science, it is economics, but it's everything. It's how we interact. So, when we leave here, what am I going to buy for lunch? How much is it going to cost? What's my behavioral change? The internet wasn't a thing, when I first started out, and now it's massively shaped the world. How does that play into the corporations and companies that we invest in? So it's always intellectually challenging, and if you're an intellectually curious person, it's really interesting. Even if you don't think about the finance aspect of it, actually, there's lots here to be interested by. And as I said, you get to meet some really extraordinary people. I've met lots of CEOs of companies over the years, the ones that now slightly celebrities in their own rights, and it's really interesting to meet them. I've met politicians, not that they're all interesting, but you get to experience different people from different walks of life, and I used to love that. And I still do have some of that in my day job today. But I think as I've got older, and I'm I don't know how evergreen this podcast will be, but I'm 46 this year, I've increasingly enjoyed building teams, mentoring people through, and trying to provide that environment for other people to foster, like I had historically. And then the big thing about Brunel that I particularly like, which is one of the reasons I ended up here, and I'd left what I would call private practice and gone to the government, is we have a real strong sense of values and ethos. So we have always invested sustainably, even before it was fashionable and commercial to do so. And from my time at Saracen and Partners, where I was running endowment money, I always quite liked that. I always liked the sense of achievement. If you did a good job, I knew that meant that scholarships would be given, grants would be made, MRIs would be, machines would be built for people. That's a real tangibility. I think sometimes with finance, it just can become a numbers game. And so for me, I always quite like that tangibility. And as I got older, I yearned for that more and more. I yearned to leave some degree of legacy to help within the confines of my industry change the way the world works. And so part of my role today as CIO with my team is to shape the frameworks that governments allow us to operate in, the regulations, to make sure people are investing sustainably with impact and helping us to go through the energy transition. And that just gives me enough of what I want from my values to want to stay in this industry. Because it can be, the industry doesn't always have a great reputation. It's quite money orientated, or it can appear like that. And I want to do something where I can, sleep at night thinking I've played a small part within the confines of what I'm good at and where I find myself, to leave a better world slightly for my children. So that really plays a strong part in why I joined Brunel, quite honestly. And some of that was age and having children and thinking about the world differently. But all of those three things, I guess, played a part. Staying in investments, because I love that intellectual challenge, managing and mentoring people through, and then being somewhere where the values that I can operate under align with mine.
Yeah, thank you. And I think that's a really great point to bring up for the audience who might think of finance or investment management as sort of one culture. But actually, if you get the firm right, you can find somewhere with a great culture and great values for you. And so it's just about doing that extra digging.
It is, and I think increasingly culture plays a bigger part in most organisations. I've found it harder to instill culture in a very big organisation where you're thousands of people. Smaller firms don't have to have a culture, but often it's easier to instill one because, like, I know everyone in the firm, everyone in the team, and it means you can live your values, show your values, and lead by example, which I think is very, very helpful.
Yeah. All right. Tell us about the most challenging part of your work.
I guess the challenging bit is when something happens, and it's a good challenge often rather than a bad challenge, just to put that into perspective. But as I talked about earlier, when you get something happens economically or socially that changes the landscape. So, obviously at the minute it is more to do with the Russian invasion of Ukraine. Obviously that was a bad surprise, but it was a challenge to markets. COVID likewise. COVID and that type of thing wasn't on anyone's radar. So when we had to cope with that, not only were we coping with that at home, I'm sure like all of your viewers, well, not all of your viewers, but I've got children, so they were at home. My wife works for the NHS, so that added a different dimension to it. And then you had the challenges that it presented at work, which is the investment markets were going down very rapidly and no one knew what the future held. So it was a challenging situation, but without sounding too macabre about that, it was also interesting. Again, as I said to you earlier, when you get these challenging situations, it can be easy to put your head in the sand, or you can embrace that challenge and change the way you operate. And obviously switching to working from home for everyone was difficult, but you had to make sure the culture stayed the same as we were just talking about. You had to make sure everyone felt supported and got what they needed, because working in an office like I'm doing today is very different than when I'm working in my normal office where I've got my team members where I can just turn around and talk and chat and share experiences. Those experiences can be challenging. In previous lives, winning and losing business can be challenging. The industry is changing; it is getting smaller. Margins are coming down, so small violin for the asset management industry, but it is changing the way people operate and work, and the hours perhaps they have to put in. And so it does look. I think the industry does look very different today than the one I joined. And so, but that's a slow, big change, but it's a gradual change that you need to embrace and kind of think about forecasting forward. And then you just get the normal challenges, which is when performance isn't good, it feels bad. And you're trying to work through it, and how do you explain it and attribute it? And the question that you always get is, well, when's it going to change? And the honest answer is you don't know. You have conviction in your views, but what you don't have is the catalyst that's going to change everything tomorrow. And so it's about having hopefully managed expectations with your clients properly to start with, so they know there's going to be periods of ups and downs, but overall more ups and downs, one would hope. And then it's when the groundwork you've laid with your clients, the relationships you've got, the relationship you have with your team, all come to the fore. And it's all about having, hopefully, got the right fundamentals with your team, with your clients, to allow you to weather those storms in a more convivial way.
Yeah. Thank you. All right, David, I'd love to go back to the beginning and hear about, what did you want to do when you were, a kid? What did you think you might do when you were a grown up?
Do you know what? My parents would tell me that it wasn't a surprise that I came into this industry. I mean, way back when, they thought about bank managers rather than finance particularly. And I probably came into the industry being very open for the wrong reasons. It looked glamorous. I think so. I graduated in '99, but obviously I had been aware of the industry for a number of years prior to that. And I lived in Essex, so I could see the bright lights of the city. I'd seen people in years above me do quite well, drive nice cars, etc. So I was probably lured in by all the wrong reasons, which it appeared to me to be glamorous. It appeared to me to be interesting. I mean, I was interested in economics. I did study that at university along with law. And so by the time I got to university, I was thinking either lawyer or something in the city. I wasn't really quite sure what. And then the law, it just revolved. It had too much time in the library for me, I have to say. So I majored in economics and then straight away started to look at jobs in the city, in the asset management industry. And then I've stayed because actually I found an industry that I enjoyed. I've enjoyed the intellectual challenge that I talked about. I've enjoyed the kind of people I've met along the way, different in different places, and culture has played a large part of where I found myself. But I've been fortunate, I think, in that I made a decision for the wrong reasons, and it's borne out okay. Now, that said, I have undergone latterly in life a period of soul searching, as probably everyone did during COVID. I thought about what I was doing for a living, and I thought, what else could I do? And again, going back to that legacy point, my parents are teachers, so I thought about that. They convinced me that I probably didn't have the right aptitude for that, and I think they're probably absolutely right. I thought about a whole range of things, and then what I found is that actually I do still enjoy my job, but I wanted to go somewhere where I could leave this legacy, which is why I ended up at Brunel, just pivoting slightly within the same industry. But I do think I was fortunate in that I found, by luck rather than design, something that I've enjoyed and been able to prosper in terms of intellectually and fulfilling in terms of my career. But it was luck. It was a judgment made when I was 17, 18, and at 17, 18, with full respect, you don't know as much as you think you do. I certainly didn't. And it happens to have turned out okay for me. But I think what's interesting is if you join in the asset management industry, there are so many different avenues to go within there. Within as we met when you were in the HR team. There's an HR team, there's a finance team, there's salespeople, there's relationship people, there's dealers, traders, IT specialists, infrastructure people, mathematicians, economists. There's a whole range of different avenues, even within asset management. And actually, when you're young, you can pivot between them should you wish to. You don't have to be stuck in the role you thought you wanted when you were, when you're 18, taking your options and deciding on your degree. There's plenty of chance to change, and then you develop skill sets, right? I think you might find yourself being very motivated by client relationship or relationships and people, in which case you can move into sales or relationship management or strategic thoughts, or even HR to a certain extent. I think there's often a misconception that you get to 21, you've got your skills, you've got your degree, you're ready, and off you go. And people are still developing. I think increasingly now, still developing really well into, I'm probably still at, but certainly well into your 30s before you've got a firm idea of what you like, what you don't like, what this industry does for you. But it's always worth keeping your eyes open when you join to say, well, actually, I really enjoy this part of it. How do I magnify this or maximize this? And that's kind of what I've always done. There's always a part of your job you're not keen on. And I've always thought, as long as the good outweighs the bad, to whatever ratio it feels appropriate, 70-30, 60-40, then this works for me. And that's, I've kind of always kept that in the back of mind through those more difficult times, or just when I've had that period of soul searching that we always do. What else could I do? Have I made the right choice? Is this for me? Because you never know the correlate. You don't know what would have happened had I become a teacher or a nurse or something else. So you have to slightly put that to one side. But occasionally it's good to get out those old notes and say, okay, am I on the right track? Do I enjoy this? is it making me fulfilled? And just make sure you constantly reassess the decisions you've made.
Yeah, absolutely. And I think, again, well, the couple of things that you mentioned there, I think are worth highlighting. I think sometimes when people think about asset management who are outside of the industry, they think everybody that works in asset management has to be good with numbers because they're going to be near the money. But like you just shared, there are so many different departments within an asset management company that you would probably be able to find something for you if that was an industry you were passionate about. And the other thing is this, I think there's a bit of a myth that when you finish education, whether that be after college or uni, or you almost stop learning, but it's quite the opposite. You will always be learning.
You start learning. Yeah, I think there's that lovely quote, isn't there, that I'm going to probably get it wrong, but in theory and practice are the same. In practice, they're not. So what you learn at university and what you learn at school is a theory, and then you get into the real world and things work differently. They really do. Those, the lovely, economics, for example, is based on the perfect person always making the perfect decisions. I've not met anyone who does that. We're real people. We're excited sometimes. We're fearful at others, and so that you have these unintended decision-making consequences, and that isn't taught in schools. And so, actually, I think you kind of you get the foundations maybe at college or school, and then actually the real world teaches you the rest, and experience teaches you the rest, and mentors and your bosses will teach you the rest as well. And so, you actually kind of start learning proper, I think, when you graduate. I have to say, unless you're a mathematician and you're going to work in math, right? Then you probably done the lion's share of your learning. But if you're coming to investment markets, actually, there's an awful lot you don't know when you first join. Which is, I remember someone saying to me, "I don't understand. The stock has had great results, company results. I predicted those great results, and the stock has gone down." That isn't in a textbook, and that's about positioning in the market and behaviour, and that's a difficult thing to get one's head around.
Yeah, thank you. I'm really curious, around this time when you were making the decision to study economics, were you talking to anyone at this point, or what kind of careers advice were you getting?
No, to be fair, I'm sure it's changed now, but the school I went to wasn't great on careers advice. I remember getting a big, thick book to look through all the different careers, pharma, astronaut, finance, etc. And you were kind of left to your own. I mean, that's not to be derogatory about my previous school, but there wasn't a lot of emphasis on careers advice. And even at university, there was some if you sought it out, but it wasn't necessarily brought to you. I think things have changed now, quite honestly. But when I talk to my sons now, and they're 9, 11, so way too early to be thinking about these things. But they come up with, I want to be a YouTuber or a rugby player or what have you. And I'd say, well, what about a marine biologist? What about a scientist? What about whoever? And I'm trying to broaden their horizons. And even at school, they're more aware than I would have been. I think just because of the way things have evolved and the internet, and you just know more. Not very much, but you know more about a lot of different things, and I think that does help. So I didn't have a lot of guidance. I did economics and law at uni, as I said, but I also took an extra module in psychology because I'd never done that before, and it kind of interested me just to see if that was something I would like to pursue. And then after my first year, I could then choose which one I was going to major and minor in, and that's when economics won out over law. So I tried to give myself as much flexibility as I could. I mean, the other careers when I was at university I was applying to, there was 3, oddly. 4, actually. There was mostly finance, so asset managers, investment banks. I also applied to work in the diplomatic service, and I applied to be a pilot. I don't really know why I did that. I think I was it probably came across my desk and I thought, well, that might be interesting. So I applied for that as well. So it was an unusual, but with full hindsight, the one thing I might have liked to have done was thinking about where I find myself now, I would have maybe liked to have gone into the medical world somewhere. I would have probably liked to, in my head at least, would have liked to have been a surgeon or something like that. But quite frankly, at that stage, and it might be the same now, the amount of training you had to do and the amount of support you needed financially wouldn't have really worked for me. So actually I was quite keen and straight. I mean, within a week of leaving university, I was at work. And that suited me. It suited my drive and ambition, but it also suited my financial situation.
Yeah,
I didn't have a lot of guidance. So again, one of the things I say to my team as they're coming up is, and I'm not trying to send anyone out of the firm, but I say, look, what do you want to do? What do you think you're good at? What do you look, when you look around the firm, which path, we can open these all up for you. You don't have to be in your vertical. What looks interesting to you? And we can think about how you get there. So even within the small confines I've got, I try and, I wouldn't say to anyone you should be a teacher particularly, but I would within the confines of the roles I have at my firm, we'll try and direct them in the place that is most suitable for them.
Yeah, that's great. Thank you. So you leave uni, and was it a graduate scheme, the first job, or how did that work?
It was, yeah. It was a very loose graduate scheme, actually. I went round all the milk round interviews, so for the big investment banks, and I got quite a long way in some of them, but didn't quite in the big investment banks, at least didn't make the final hurdle. That was eye-opening. And so no one had told me how that worked, which is, it might work differently. I'm sure it does work differently, but I remember going in thinking I've got quite a good CV. I'm quite all round. I thought that there'd be lots of maths geniuses, and I was like, well, I'm a bit more rounded than that. Perhaps that's why I'm here. And then I remember one particular interview, the last 20, and then they took a Polaroid of me as I walked in, stuck it on the wall next to my CV amongst all other 20 candidates, and we had an hour just to have a look at each other's CVs, and that was very disheartening, because then I found people who were, captain of England football team and 5 A's at A level and firsts and all this other stuff, and I thought, oh my god, this is kind of rarefied air. But then I thought to myself, well, I must be here for some reason. And it didn't look like I could compete on paper, actually, and that was quite an interesting experience. Whilst I didn't get that job, I was in the last 20 out of, I think it was like 1,500, and it gave me the confidence that actually, if I found the right niche for me, I could. So I did find a graduate scheme at an asset management, and that's why I ended up at asset management, not in investment banking, actually. And it was quite loosely termed a graduate scheme, but they made you work, or they asked you to work in, in what was then called the back office. So I did some work in operations, in some tax, in valuations, and actually I learned from the ground up. And then you float and you find a desk on the investment floor, and that was really, really useful for me. So I had a slightly because of that slightly different upbringing in the industry, that I understood what happened when you press the button as a trader or a fund manager. I knew the supply chain that went on beneath you, and it kind of meant actually I had a better appreciation for what I was doing. It meant I knew who to talk to when things weren't going as they should, and having an appreciation for everyone else whose life you made difficult if you traded at 4:30 on a Friday was also quite useful, because people were willing to work a little harder if they knew you appreciated what was going on and you knew their role. And so I've always tried to stay as much as possible across all of the supply chain. So you don't just stay in the investment team, you speak to people in ops and finance, and you work out what they do and how you can help. And again, that's something I've learned over the years, and it's not quite altruistic, because actually if people think and I appreciate that you appreciate them, you get things done a little quicker. I could always jump to the top of the pile of people's work if they liked me, because I was appreciative of what they did. And so, I'm not saying I was doing it for everyone else's benefit. I found there was a benefit to me of understanding how the whole industry worked. But I had a slightly different routine, and then I found myself at Bearings eventually in the front office, running money for the big the pseudo institutional clients that were more the family office type clients.
Yeah.
And then again, I have been very fortunate, I think, in so much as everything has relatively panned out for me. So the team at Bearings actually then left, and I'd only been there about 2 years, and they tapped me on the shoulder and said, look, would you be interested in coming? Some of it, I suspect, is because they didn't really want me to stay, because I could have been disruptive to the plans to take people with them. And I ended up going, and then I found myself in the institutional team, which is probably where I was trying to gravitate to anyway. So I had an easier route in.
Yeah.
And then I've just been fortunate in that I've worked hard, but I've made myself as indispensable as I could at that stage. And so when opportunities came up, when my boss in a couple of instances left, I could then fill the slot. And so I've had 2 or 3 times when it's been fortunate that someone else has vacated a seat at the time I was looking to find one, and that's in the lap of the gods, quite frankly, or whoever your god might be or not be, as the case may be. But that's just chance, and so I'm very aware I've been fortunate in that regard, to have just slipstreamed him as someone was moving away.
Yeah, thank you. I wonder, for people who might have heard the phrase back office and front office, I wonder if you might just give us a quick overview of that
Yeah,
flow from perhaps back office to middle office to front office, or in reverse, just so that people can kind
yeah,
of visualize what
yeah,
happens.
absolutely. So I think there are terms that are no longer really used today, and rightly so, because it back, front, middle defers an order, and there isn't.
Yeah,
So, but
yeah,
if I think about if I'm a portfolio manager and I decide to trade or buy something, on my screen as I could be today, I press buy. That's me done. Essentially, that one,
yeah,
I've made an intellectual decision. I've decided what I'm doing. I've pressed buy. That would then flow to the trading team who would make that trade. They would take cash from the, or that depends on where you are and how it works, but there's an operations team that would make sure the cash is available to trade. There'd be another
hmm
part of the operations team that would make sure that trade is reflected on the system the next day, so I can see what I've bought, the price I paid. There's reporting functionality, so people who provide the performance and risk statistics that feed into the tools that I would use, and also into the clients. And then there's everyone who supports that functionality. So you've got the kind of an operations team. I guess if you think about probably another bad analogy, but if you think about a Formula One team, you get the driver,
yeah,
but the driver can't drive without someone building his tire, building his car, engineering people designing it, designing the wheels, designing the curve of the car, all the diagnostics, the person probably who's his gym trainer that keeps that person, the car, fit and healthy and strong enough to do these things, his personal
yeah,
coach. All those people you see in the pits are necessary for Hamilton or whomever to drive that car. And I think sometimes the focus is on Lewis Hamilton or whomever it might be, and people forget that there's
yeah,
hundreds of people, if not thousands of people, behind that one arrowhead of a car. And the
yeah,
front to back thing was always the kind of flow. So the middle
yeah,
office would be, it depends on anybody, but the liaison. The back office would be people to settle the trade, make sure the cash is where it is, sent to the right people, reporting,
yeah,
etc., etc. So it's just a supply chain. But yeah,
yeah,
front, back, and middle is probably not a term that most people would be aware of anymore, and probably isn't the right one to use either, quite frankly.
yeah, yeah. Thank you. That's really good. And I'd also love to hear about your first foray into leadership and understand where that
Hmm.
was, David, and what that looked and felt like.
Yeah, I think as I progressed from a junior portfolio manager into something more senior, you have um, you often will have people that work under you or for you or with you, probably more appropriately. And so probably over the last 2 or 3 roles I've built teams or had teams. It might only be 3 people, 4 people, 5 people, 6 people, but you have teams, and so you kind of cut your teeth slightly in leading those people, because technically you might be their boss or slightly higher than them in the kind of the hierarchy. But also then you have what someone described to me as a sphere of influence. When you get to be a senior PM, it's not just the team you work with, it's the relationship
Mm,
managers you work with. And again, you're not their boss, but you have
yeah,
influence over them. You have a role to play in the delivery of their job. And I've always found a couple of things useful. So I've remembered when I've been treated well or not well, and then tried to not fall into the same traps that I've felt as a junior person. I've always personally wanted to give people enough rope to hang themselves by, if that's not too much of a horrible expression. So give people enough latitude, but give them the right governance around,
yeah,
so they make them feel comfortable. Try and be very honest with people. I remember being very ambitious. I probably still am a little bit, but very ambitious as you're climbing up. And it might be that you just had 3 or 4 years of not making them. All your decisions have
mm,
come quite good for you. So it's quite easy to get overly confident with your own abilities in this industry, because if you do well, the rewards come and people fet you, etc., etc. So trying to keep people, and I was probably one of those people, trying to keep yourself or other people humble, and understanding and honest about the decisions they've made and how they've worked out and how they could have gone wrong, etc., etc. I think is very useful. Building people up emotionally, I think, is useful.
mm,
When we'd had more difficult times, I remember there were certain people in the organisation I was at who were really supportive of my then boss and the team I was in, and that made you feel better, and
mm,
supported you to make the next decision with conviction that otherwise you might have been concerned to take. Because every time you make a decision, you're stepping away from the market often, so you are a bit out on the limb, and you're going to be judged. So the teams that I've found work the best are those that are supportive, and so I've just tried to instill that in the way I lead people. So you give them
yeah,
enough latitude to do what they want within the governance framework you've got, but you support them in making those decisions. I rarely say you shouldn't do that or you should do that. What I say is, well, have you thought about this or have you thought about that? And I just help guide the decision-making framework they use, because I think that's particularly useful. And it's just, you can provide your experience without telling someone you need to do this or you need to do that. Because I know that's what I benefited from vicariously when I was younger, not realizing that's what someone was doing to me, and just they were nudging me in the right direction slightly with an experience, or just saying, well, when I did this in this experience, this happened. Are you comfortable with potentially that? What's the magnitude? How are you sizing that position? What's your thought process? So you get them to articulate what they're doing and make sure it's consistent and logical. But it's really just about shaping people, I think, but without doing it in a very overt, heavy-handed way. Because if you don't make these decisions yourself at some stage, you never will, or you won't know what that feels like. And so you have to start kind of letting go a little bit, but within a governance framework, because you can't, with the best in the world, have very young people making very significant investment decisions, because that's not, they don't have the experience. So it's a gently kind of letting go and guiding until such a time that they're fully experienced and do it themselves. But even then, it's about providing the right challenge and debate. And again, the same framework. So the same things I use with senior people, I would use with junior people, which is, okay, how have you thought about that? Why is that not going to be a problem for you? What might be the outcome if this happens? You're just providing kind of additive information into their investment conversation.
Yeah, that's helpful. Thank you. And so you kindly shared with us the typical journey from junior analyst to CIO earlier. Is that reflective of your journey through Barings, Saracen and Russell and now here?
Yeah, I think mine's been quite a traditional route in that I came in. I mean, the difference has been I started off in more private banking, private wealth, and I migrated towards institutional investment management. But I came through the usual. Actually, the only part I didn't really do, actually, if I'm thinking about it, I wasn't an analyst in a pure sense of the word. So I had stock responsibilities, but I wasn't my full-time role was never as a portfolio manager. I came in as an assistant portfolio manager and worked my way up that way, which I think still exists in some places. But yeah, I wasn't a fully fledged career analyst as some have been. But otherwise, it's been reasonably traditional.
Yeah. Okay, thank you. And one of the terms you used earlier that I suspect the audience might not be familiar with is multi-asset. Could you just share what that means, please?
Yeah, it's so there are various different funds and products one can run. You can run an equity fund, so you can run just a share portfolio against maybe the FTSE, so the UK benchmark. You can run a bond portfolio. You can run a commodities portfolio. Multi-asset is when you're trying to achieve an outcome and you incorporate all the different asset classes you want or allowed to. So my funds would own commodities, bonds, equities, currencies, infrastructure, private equity. So the whole kind of universe of assets were potentially able to be included within the portfolio. And I've always liked that. I've always quite liked being a generalist, not a specialist. I like that kind of 1,000 feet view. So strategically, what should I think about doing? And I've always been very happy, probably because I've met lots of smart people, to never be the smartest person in the room and to rely on specialists to provide some of the information that I required to make the decisions that I needed. And when you're running multi-asset, you can't be on top of absolutely everything within your portfolio at a granular level. So you need good teams. And I think that's why hopefully I've made an okay CIO, is because I'm very used to that framework of having a lot of people feeding into a process of decision making and being comfortable not knowing the last stock in the portfolio, because I know somebody else, an analyst and an equity specialist, will be covering that on my behalf and feeding that information in. And so from a young age, I was able to let go, if you like, to a certain extent, but also be happy with not being the specialist and the expert in the room, but being perhaps the expert at my level, which was across asset classes. Okay, you're the equity specialist, you're the bond specialist. My decision is which one looks more attractive, because they're both going to vote for their own children. I just need to say, which child is better for our portfolio at that particular juncture.
Yeah. I think that, like you mentioned earlier, it requires a humble quality. And I think sometimes that we associate financial services with big egos. And I think that role you just described there requires being able to put that ego aside, right?
I think a little bit. That isn't to say I haven't been, or I haven't met people in multi-asset who have big egos. There are historically some very big funds out there that run money like this, where the egos are significant, and it's because it's a learned behavior. If you do very well, people fet after you, tell you you're great, tell you you're a genius. Not quite, but you get the picture. And so you can easily believe your own, or believe the rhetoric that surrounds you, until the first time you get it wrong, and then it's then that's when that humbling part comes in. So, but you're right. I think people do sometimes look at the city and asset management firms, and investment banks, and think about all the behaviours that you wouldn't want to see. And ego is a variant of one of those.
Yeah. Okay. Thank you. So, David, when you look back at your career journey so far, what would you call out as the high?
I think it would be glib to say today, because just because of the title. But I remember being very pleased when I made a partner at Saracen and Partners. I was reasonably young, 35-ish, 36, whatever it might have been, and that was a big thing for me, because it showed that the broader partnership had trust in my ability, and I had established some degree of credibility. And if you can do it with those who see you day in, day out, it's a lot easier to do it with clients. And rather than anything else, it was an endorsement that I was okay, hopefully, at the job I had chosen. So that was quite nice. Other highlights, I really liked, I still do, but when you're younger, when I had less responsibilities and no children, etc., the world is a little easier. And the camaraderie I've had in different teams when I've been younger is really good. So you share the highs and you share the lows, and I think, again, people don't realize that happens in an asset management industry, because it can be a bit more of an emotional roller coaster. In the right team with the right people, it's really heartening. It's these people become, often, and not everyone you work with, but a number of people I used to work with, I'm still very closely connected to, and still see. And I guess the other point on that, actually, when I think about it, is when I see people who I've hired, who have been in my teams, go on to do very well, that's also really nice as well. It's like, well, I chose the right person. I've had some role in developing them. And I had dinner with someone the other day who's now become a CIO at an asset management place in Dallas. And I remember helping him write his immigration form. We had to call him an alien of special ability. I think it was some odd term. And we were joking about that. But that was nice, because you help someone else on their path. And again, that gives you credibility. Okay, that I know what I'm looking for in a person. I know I've had some role to play in their development, and that gives you a sense of achievement. And then today, some of the things we do in our portfolios, I think, are really decent. So particularly when it comes to energy transition or renewable energy, I can really see the impact of our money going to work, not just financially, but in the broader world, in terms of trying to transition ourselves away from oil and gas. And that gives me a real sense of achievement as well.
Yeah, thank you. Again, looking back on the career journey so far, what's the biggest challenge or failure or limiting belief that you've had to overcome?
I think when performance isn't as you would like it to be, it's very easy to blame extenuating circumstances, like, well, I didn't know Trump was going to say that or do this, or whatever it might be. And so I think there have always been the challenges when you find yourself in a position you don't want to be, and everyone will. The thing about performance is nobody has good performance year in, year out. You look over the long term to see whether you've done a good job, but the industry and clients often, and the way the regulations work, are a bit more myopic. You measure quarter to quarter, which can create some behaviors that are probably not useful for long-term performance or long-term investing. And so I've definitely had points in my career where I've thought performance isn't as I would like it to, where the workload might have been quite egregious, and you find yourself working long hours and you're tired, and it's just knowing that there's an end to that at some stage, that you're going through a bad performance patch, or you're going through a period where everything is just super busy because the markets keep throwing, when we're going through Brexit, for example, every other day there was a different headline that was jerking the market in a different direction. And trying to stay calm and rational in there is really useful. People have described me as being reasonably stable emotionally. I think that's helped. But there have definitely been points when you think, goodness, this is so difficult. How am I supposed to manage money when the world is constantly changing and quite binary?
Yeah.
And then over time, you realize the world is always a bit like that. There's always, everyone talks about this is the worst crisis. Well, they said that about the last one and the last one and the last
Yeah.
one. So over time, you realize that these things are part and parcel, and you start to recognize behaviors in yourself and the markets that you can start to adjust for. But I think I've not had any horrific experiences, quite honestly. I've had things that with hindsight, I've seen other people do that I wouldn't do myself. And I've learned there are certain ways to deal with people that are better than not. But I've not had any, real horrible experiences. I've just had lots of little learning experiences along the way that hopefully put me and my team in a better stead when we experience something similar again.
Yeah. Yeah. And actually, you make a great point there. As long as you learn something from a challenge, a failure, or whatever, then you're probably not going to make that mistake again, and you've gained from it.
Yeah. Yeah, actually thinking about it, when I think right back to the beginning of my career, I didn't realize it was a challenge actually. I said my CV was pretty reasonable, but it wasn't, a first from Oxford. And I hadn't quite realized at some stage in my early career, there were lots of people that had these things. There were lots of people who had gone to very decent schools, both prep schools and all the way through universities. There were lots of people knew each other, and lots of people had connections at the firm. I didn't really have any of that. So luckily I got my foot in the door and wasn't worried about that, and didn't know it was a problem until I was already through the door. And then I saw people and I thought, okay, and obviously I'm a man and I'm white, so I don't have any of those kind of disadvantages, which I know are very, very prevalent for other people. So I've been fortunate in that, and I know I've benefited from both of those two things, I would suspect, both overtly where I've known about it and where I probably haven't. But again, for me, I came into a world where there were lots of people who seemed to know each other, and their fathers or their mothers were clients at the firm, and there was a slight feel of, oh, I don't have that advantage. How am I going to overcome that? And I just made sure I was visible, I was indispensable. And what I didn't really realize, I was watching an interview with President Obama, and he said someone asked him a similar question, I think, and he said, you just need to be someone that is seen to get stuff done. And he said, in his life, he's seen lots of very smart people, lots of people who can tell you what the problem is, lots of people who can tell you why they shouldn't be in this predicament, but very few people who can actually fix it, sort it, do it, and execute. And he said, if you're one of those people, whatever you do in life, you will get noticed and you will push through the ranks if that's what you wish. And I think inadvertently, I've always been somebody who gets stuff done. And I hadn't realized perhaps the power of that until actually I heard him talk about it. Or the way people view you, they say, well, why don't we give this David? He'll be able to do it. He's got credibility here. He can take that on. We went to check and all the rest of it. And I just made sure I was that type of person if there was, and there might not have been any hurdles, but if there was, I was making sure that I was at least in there for contention when we were all rising through the graduate ranks and trying to get positions on the investment desks.
Yeah. I guess understanding what your unique thing is and pushing that forward.
Yeah, and slightly, I was quite shy, which maybe surprises people now, but quite shy as a young man. Certainly as a boy I was, and I wasn't used to networking. I used to hate it with a passion. And I didn't force myself to do it, and I don't do it a lot even now. But where I knew it was useful and I had to, I kind of got over some of my hurdles and tried to do the best I could, and worked out where I wasn't very good at things, and I tried to improve. And that was something I've had to slightly overcome. Like the first time you stand on stage in front of 500 people and speak, it can be quite nerve-wracking. And pushing yourself to do things that are outside of your comfort zone are usually quite good learning experiences.
Yeah. And I guess networking is a scary word. Presenting, also a scary word.
Yeah.
The audience might be fearful of those things. So I wonder what would be your top tip for, doing those things, even though you might be nervous or scared of them.
Do you know what, networking, I probably don't have any good advice because I'm still not very good at it, I suspect. And I've managed to survive this long, which is probably the lesson. I've managed to survive this long without being very good at that. But the kind of networking I did do was, when I was a graduate and there was an investment meeting, I'd ask if I could go. If there was an investment conversation, I'd ask if I could join it. So I wasn't networking in, I guess, the way people might think about it, kind of it's after work or any of that kind of stuff. It was within the work framework. I would make myself visible, and I would be asking what I perceived to be the right questions of the right people. So people then knew who I was without me having to do, mingle at the drinks party or the Christmas party. Because that I just was too awkward for that. And then presenting, I don't know. I mean, I've had lots of training over the years. Some of it depends who you're presenting to, but at some stage you're on stage for a reason. Like someone has chosen you because you're good at what you do or an expert in your subject, and it sounds a bit arrogant perhaps, but you have to think about, I probably know more than most of the people in the audience, and that's why I'm on this stage.
Yeah.
And there's reassurance in there, but it's also super nerve-wracking because again, you come out of school, you might have done a bit of presentation training, but in front of your class, not on the stage with a microphone, it's kind of horrible. But I thought I was I was asked to do it when I was quite young, and going through the more I did it, just the more, not the better I got, but the more comfortable I got, actually.
Yeah.
And I found a way of doing it that was authentic to me, and I found a way of doing it that worked for me. So I prep a little bit, a lot less now than I used to, but I like it to be, it helps me if I feel a little bit of an adrenaline and a little bit of fear. That makes me I think, a more interesting presenter. Whereas if you learned something, which is an okay way to go, and it works for different people because then you've got it nailed. It didn't work for me. Trying to gesticulate because someone said that would be a better way to do it. I had to find what worked for me, and you only do that with kind of experience almost. But presentation training, I think, is really useful, and we don't do enough of that as we go through the school kind of career, because you're an interview you're presenting. I had interviews when I was young that maybe there was 7 or 8 people in there, and that you're somewhat unprepared for, kind of interview training, and so even prep for that is very useful.
Yeah. All right, thank you. David, you've mentioned that you are mentor to young people and people on your team, and I'm curious about the role of role models and mentors and sponsors in your career.
Yeah. Do you know what? I think the strongest role models I have are probably my parents to a certain extent. I mean, they don't know much about finance, but they instilled in me a work ethic and a belief that has stood me in good stead. I've seen through my time at the various firms I've worked in what I think is good practice, and actually what I don't think is good practice. So I think I've never really had, and maybe this is, I'm sure they won't be listening, but to all the bosses I've had, I've never really had, I don't think, a mentor who's taken me, or a boss who was that mentory, which is why I'm quite interested in doing that for the team I work with and have worked with. But I've had people I've sat next to or in the vicinity of who maybe they didn't realize it, but were mentoring me in the way they acted, the way they did things, the way they thought about things. And then also I've had, in a reverse role, I had someone who was in my team who was, I'd hired and was junior to me, who actually taught me quite a lot as well. And he probably doesn't realize that either. So I tried to have a mosaic of people who I thought, okay, well, that's a really interesting way of doing things. That seems to work. I can understand that. I like their way they're handling themselves under interrogation or whatever it might be. And so I've not had just the one person that's kind of pulled me all the way through. I've just seen examples of good and bad behaviors and processes that I've liked, and then I've amalgamated what I think is the best practice, but also what works for me. Because there are other people who do things in what is a very successful way that I just know won't work for me. And so again, choosing the parts that work for how you're set up and the firm you're in and how you respond is pretty useful.
Yeah. All right. Thank you. So for anybody watching or listening who's thinking, oh, this sounds like a great career for me, I'd like to get into an investment management team.
Yeah.
In terms of education, would you say there are any essential or desirable educations or qualifications somebody should be thinking of?
No, I've never thought so, but I know the industry had. So when I joined a long time ago, you could have any degree, largely speaking, I think. So I mean, I had economics, but I had colleagues that had done history and geography, which you think, well, how does that play into it? And then there was a period, it seemed, when I was too young to be recruiting, that they went for STEM, science, technology, maths, etc. And there was I think an overly driven focus on that, which creates groupthink. If you come from the better schools, you will learn the same things in the same fashion, in the same way, and it was very undiverse. And now it seems to be broadening out. I've always thought a degree is useful, clearly, but the subject is, it depends on what you do. I don't want to be derogatory about certain subjects, but it's about how you learn. You can learn economics, unless you're going to be an economist, it's less useful. it's useful to have an understanding, but you can get that on the job training in your postgraduate qualifications. What we very much look for now, at least I do, is I like people who, as much as possible, look like they've done something additional. So what I did when I was younger, when I certainly realized that there are people who might outcompete me, I started doing work experience. I started showing an interest. I went into interviews knowing much more about the investment industry than I think others had, because I'd researched it and thought about it and spoken to people as much as I could who would give me a steer as to what I might need to think about and books I might need to read. And I tried to develop myself so in person I was as well prepared as I could be. And so I like people who have researched the firm. When we interview them, they know what we do as much as they can. I like people who come prepared if they've been in an investment club at university, or if they've done something that is additional, that shows something they didn't have to do, that shows they're actually interested in this role. I think is really useful. I don't really want people like me way back when who just came here for the money. I want someone to say, I want to come here because of X and Y. And it's okay if they don't know it fully, because they're not supposed to at that age. But someone who's thought about, why are they here? What are they looking? Why here and why not somewhere else? And quite honestly, I like people who it feels like on paper they've kind of fought their way up a little bit, who have overcome some odds, because then I know that they really want, or it's more obvious that they want it. I'm not discriminating against anyone who perhaps hasn't had to do that, but it is something that I am aware of when I look at a CV. Someone who's taken a year out to do something, or is just more well-rounded and has got different life experiences. So I don't look for. I mean, obviously, if you come and you've got a PhD in quantum physics, that's pretty decent. So I'm definitely not saying that isn't the way to go. But you can augment what qualifications you have by the kind of person you are, by the aptitude you have, and by the emotional intelligence you show.
And what about soft skills? What, in your opinion, what soft skills make for a good investment management team member?
I think communication, but I have to be very aware, and this is something I've learned over the last 5 or 10 years I've been recruited and done some more diversity work, that culturally, not everyone is the same. And some cultures, some people are much more quiet and reserved. It doesn't mean they're unconfident, which it can often come across. It doesn't mean they're nervous. It just means that is not in their nature to be as forthright as some others. And so again, whilst communication is key, I have to balance that out with some people are going to be overly communicative. I shouldn't let myself fall into the trap that means they're super confident and knowledgeable. It just means they're better or been more accustomed to talking at you or for you or with you relative to other people. So it's a difficult one. But empathy, EQ, however one wants to think about measuring that, I think is really important. And understanding yourself, and everyone can understand themselves to a certain extent. Why are you here? What are you looking for? What are your values? So these are quite easier things to understand about yourself. And I think that does help. It helps. Yeah, it helps if you're a bit more, or not mature, maybe that's the wrong word, but you're more than just your qualifications.
Yeah. And I think other things that we've mentioned throughout the conversation are that ability to collaborate, listen to other people, the resilience piece. Those are things that I've heard as well.
And you can teach some of these, and I think people do think if you're wrong, that's a bad thing, and it's not. You are going to be wrong, and so actually those things that can be taught and shown over time, rather than understanding that when you first come into it. I think it's about having a good grounding of the industry you're wanting to go into and why you're wanting to go into it. I always quite like people to say, well, I've thought about this and here's why. And I often say to them, what else did you consider? And why didn't you proceed? So that you get the corollary as well as what they're going to do. And so I think, as much as one can at 18 or 21, having an understanding as to why you're sitting in that seat opposite me asking for a job is really useful.
Yeah, thank you. So in terms of places to point people who want to find out more, are there any resources or books or podcasts you might recommend?
Yeah, I mean, podcasts, there's loads now. So the ones I listen to, I don't know how well I can probably say. So I listen to one called the Money Maze podcast. I think it's very useful. It gives you insights into all sorts of different people and industries, and they do things like this. Once you've clicked on one of those, you obviously get the others like that. Are quite useful. I'm just looking at my bookshelf now. I've got a whole host of books. Some of them are a little technical, but I remember the first book I read that kind of got me interested was the Nick Leeson Bearings book. and which is a weird one because it was about him losing 800 million and going to jail. But it got me, and then obviously I ended up working for him. So that was maybe a coincidence, but it got me interested in the industry.
Yeah.
And I'm not saying you should look at The Wolf of Wall Street and think that's how things should work or do work, but there are many books out there that I think will give you and it doesn't have to be the technical books. So I've got one called Memoirs of a Stock Market Operator, which is someone who ran money 100 years ago, and it was just interesting. Didn't talk about formulas or quantitative physics. It just talked about emotions and how it worked then. And it just, I've always found those kind of books interesting, but I'm sure any good Google search will bring you a whole list of the top 10 finance books. So I'm not sure I have the epiphany on all of the best ones to read.
Yeah. And I think it's also about just, like you say, getting familiar with the subject matter, the industry and the terminology. So even if that's just reading the FT or watching Bloomberg occasionally, or I recently read a really interesting book called The Psychology of Money, which whilst wasn't an investment book, it certainly gave me, and I think would give others, a great framework for money. Yeah.
And there's lots of interesting ones like Black Swan, and there's some really. Do you know what? Freakonomics I would recommend. It's really interesting. It's a good read, even if you're not that interested in finance. It's about why things are the way they are and the unintended consequences. And it is and there's a Freakonomics podcast as well, I think. So I'm probably pitching books I shouldn't, but it is interesting, and it's a really easy one to start with. I think it's kind of entertaining. You can dip in and dip out. So it's a reasonable, I say holiday read, but you can do it on the tube, on the train, and it doesn't require a whole heap of concentration.
Okay, great, thank you. David, what does the future hold for investment management?
I don't know. I mean, the trends that are with us at the minute are outsourcing. So, which is good if you're in asset management, because lots of organizations are outsourcing the running of their money. So it's good for asset managers, I guess. I would also say probably increased consolidation, which I don't think is as good. It means there are less jobs, there are less firms, and there are less unique firms because they all get, they go to the super tankers of this world. I think those things continue, but I think an AI, obviously. I mean, I did mention I was 46. I'm not exactly up to date on all things technology, but AI will revolutionize and change the way we are doing things and are already doing things. It might actually, interestingly, what we were talking about recently is, a couple of years ago, I was telling my oldest son who'd started to code, this was a really interesting thing to do, and that all the graduates I see can now code, and it's really important. Actually, AI might supersede that and leapfrog, a bit like the mini Discman that we all had at one stage. It was useful for about 18 months, and then and then downloading came in. So I can't stand here and say I know what the future holds, but I think those trends of outsourcing, of consolidation probably are here to stay. But I think the general premise of this job, which is what the step beneath me, which is finding good investments for the future and investing in them is always going to be with us in whatever way or shape or form you identify those ideas or due diligence them. That basic premise I don't think can be taken away. So I don't think we're an industry that's going to get mechanized away. Some bits have. The dealing process has gone to algorithmic trading, and there are probably less people in every firm now than there was 10 years ago, but it is quite a big industry. I don't think it shrinks to zero. I think there's still a role to play for different people, and actually the skill set that you can never replicate, at least I believe, is EQ. A computer has a better brain than will ever have, but it is not emotionally intelligent yet. So what everyone thinks about the future of AI and sentient computing, actually emotional intelligence, explaining things to people, is a skill set that I think is going to be needed in every walk of life, particularly also in asset management.
Yeah, thank you. David, what do you know now that you wish you'd known when you were just starting out in your career?
I don't know. Not to be in a rush to get to move up the ranks, actually. Probably when you're young, you're ambitious. You have a greater desire, and it is a good thing. I think broadly to have those qualities. However, they do probably need to be tempered. I think mine needed to be tempered a little bit. And if you can find yourselves, and I probably should have looked a bit more closely for a kind of a direct mentor, I think would have been more useful for me along the way. I didn't have when I moved jobs around, because I joined, during the tech boom and bust. I then went through eventually the global financial crisis. There was lots of chopping and changing. That wouldn't have been anyone's experience who ran money through the 90s, for example, where there was a few blips, but largely it was quite plain sailing. Maybe I can only say that because I didn't run money through that period. But preparing yourself for those kind of ups and downs is useful. Having the right support network around you, whether that's a team that you work with or family and friends, is kind of useful. I've never found myself in a predicament where that's been particularly something that I've aggressively needed or fallen back on. But I think, actually, sorry, I'm kind of shooting from the hip here. The things that what I should have known or would have liked to have known then that I know now is to be more open, to talk about how you feel, to share those experiences. And that comes with age, but it also comes with generational change, right? I think many more people are willing to talk about how they feel and identify in other people things they're going through. And that wasn't the case 20 years ago. It was probably seen as more of a weakness. Mental fitness wasn't a thing that was talked about. And so whilst I didn't need it at that stage, I've been managing people for longer than just the last 2 years. And actually, if I'd have known what I know now, I probably would have, gone from 10 years ago and said, how are you feeling? This is my experience. What can I do with you? Those I could have at least tried to open up those kind of conversations, which would have well, maybe not, I don't know, but it would have, if anyone had any problems or issues, it would have hopefully helped them through it, because this can be this can be quite a lonely place when you're running money and performance isn't what it should be, or even if it is what it should be, but the market's going down and everyone's telling you it's the end of the world, a la the global financial crisis or COVID. It's quite an isolating world. And actually, I think the world has changed. Not something my younger self would be surprised to learn now, but I think if I was a young person now, I think it probably is a bit more open about how people feel and honest. But that would have been useful to have known 25 years ago, that it's okay to feel a certain way at a certain point. In fact, it's very natural. If you don't, I'd have more concerns than if you did.
Yeah, I mean, I think I'm just a little bit younger than you, David, and I think we probably both joined the workforce when, you were expected to leave your problems at the door, and get your game face on, and asking for help was seen as something of a weakness. And I'm pleased to see that's changed over the last 5 to 10 years.
Yeah, I mean, just where we are today, we have lots of workshops, both for managers and for employees, around mental fitness, around mental health, so that everyone is more aware. And then it's very obvious, hopefully it should be more obvious, as to if you're feeling certain things, where you can go, what you can do, where the support can be found, and for people in management, where they can spot it and what they can do to support. So I think it is a much better place today than it would have been 20 years ago, and still needs to continue, but it's moving in the right direction.
And what would you say to David, who was looking at the bright lights of the city from afar and thinking about studying economics?
Knowing what I know now, I'd say continue, but do so for the right reasons. I mean, I was fortunate in that the decision I made was a bad decision, but it's turned out okay. So much to my point earlier, you can make an investment decision for the wrong reasons and it can be the right thing to have done, but you have to accept you did it for the wrong reason. So I'm fortunate that I found a career that I've really enjoyed. I've enjoyed the people I've met, the company CEOs I've kind of talked to along the way, the colleagues I've had, but just a constant intellectual stimulus that you get, which is the world changes. You're not on a supply chain of doing the same thing every day, and you get some horrible things that happen in the world and that are unpleasant to have to deal with, but it does provide challenge and an interesting environment in which to work.
David, do you have a favourite quote or expression you'd like to share with the audience?
Probably the one I quoted earlier. You're never as bad as you think you are when things are going badly. You're never as good as you think you are. People tell you are when things are going well. There's a middle ground in those peaks and troughs, and actually it's very good to remain grounded in both directions. There should be symmetry here. You shouldn't be protected on the down and taking all the upside. But emotionally, I think you're never as good as people think you are when you're top of the pops and right at the top of the leaderboard, and you're never as bad as you think you are when you're at the bottom. And I think that's an important lesson because it helps you with the emotional journey, which is running money.
Yeah, thank you. And what's your secret to a happy and fulfilled working life?
I think eventually understanding what you want. I think if you can document and think about in your head what you want, then you can seek to achieve it, or move to a role or a firm that offers what you want. But really, it's about, for me, as I've got older, it's about alignment of values. So I wanted to work somewhere where my values reflect in the team and the culture that I see. That was really important to me. Hence that conversation about legacy and doing something within the confines of finance. And I'm not, I'm not a surgeon. I'm not saving lives. I'm not a teacher. I'm not educating young minds. So within the field I've chosen, I want to have as much impact as I can, and do so in a way that is values orientated. And so understanding that in myself and then seeking out a firm that offers that, I think was very important for me.
Yeah, thank you. David, thank you so much for joining us today. This has been fantastic. I've learnt loads, and so I'm sure the audience will as well. Are there any final words you'd like to leave the audience with?
No, I mean, if people are listening to these kind of podcasts, they're probably already interested in finance, but I'd like to think we are reaching out to people who are just semi-interested, because asset management is a really decent place to work. It's fun, it's exciting, it's intellectually challenging and has lots of stimulus. But I think people are put off because asset management is caught up in this umbrella view of the city and the bad behaviors and the sharp elbows and all the nefarious behavior that one hears about since the global financial crisis, and that isn't asset management. So I do think this is an interesting environment in which to work for everyone. Whatever your skill set, there'll be a role for you.
Yeah. Okay, thank you very much.
Not at all. Thanks for having me.
Thank you so much for joining David and I today. We really hope you enjoyed the show. If you gained any value out of today's episode, please share it with your friends and subscribe wherever you get your podcasts. And do get in touch with us if you have any questions, comments or suggestions. So until next time, have a think about EQ, emotional intelligence. How do you understand and manage your emotions within yourself and in your interactions with others? Because just like in finance and tennis, it really can be a determinant in your success. Thanks so much. See you next time.